Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, February 1st. Okay, we roll into a new month of trading. We finished pretty weak last week on Friday with most of the broad markets down significantly on Friday, but things have turned around over the weekend. We are broadly higher today. The broad market averages, SPY, QQQ, and IWM are all up about 1%. Oil's up 1%. Gold is up 0.75%. And silver is the talk of the town this morning, up 10% as Wall Street bets rolls into trying to force a silver short squeeze. And the miners, the silver miners are all reacting dramatically this morning. Majestic Silver, Mag Silver, Pan American, PASS, another ticker would be AG, another ticker would be MAG. You can look at those today. But I think the silver short squeeze is going to be a little bit tougher than GME. It's a much bigger market, and I know on the Wall Street bets there seems to be the consensus of some massive institutional short on silver, and it may be the case, but I don't think so. Most of the commentary that I've heard is that there really isn't a massive short interest in silver. Most people that I've heard and listened to, it's about 15 to 20%. But that may be enough to move the market. So we're up 10%, and that ain't chicken feed. So if you're in that trade, watch it careful and roll your strikes up and take profits in case they pull the rug on it. But it looks good so far, and we'll see how far Wall Street bets can push it. Now, as far as the other Wall Street bet names go, oh my gosh, GameStop, BlackBerry, Bed Bath & Beyond, I can't even think of all the names right now. Robinhood has still instituted quite a list of restricted names. So we're going to have to watch those names and see, if you're interested in trading them, see if these restrictions, and probably a lot of the other brokers too, but, Robinhood is catching the attention of everybody. If that puts a ceiling on pushing the names higher, and if the air starts to come out of the balloon. And one thing I'm looking at really closely is the ETF XRT, which is the equal weight retail ETF. And where before this all started, a name like GameStop might have represented, let's say, 1% of the XRT. Now it's 20%. And if you go look at that chart, it's gone parabolic as GameStop has garnered a larger and larger percentage of that ETF. And so if the bottom falls out of GameStop, the bottom's going to fall out of XRT. And that's how it goes with these passive names. These passive tracking ETFs, they have to buy when the underlying goes up or down, and they have to sell as well if it goes down. So the thing I'm concerned about on XRT is the implied volatility, which has gone to the moon on the options. So we're going to have to see if we can put together a strategy to take advantage of whatever move might be coming without overexposing ourselves to the IV crush which most definitely will be coming. So also the thing I want to remind you about this morning, with all the averages up 1%, is that there'll be a gap below price when we open from Friday's close until the level at whatever level we open at this morning. And keep in mind that gap may prove just too irresistible for traders not to sell into. So don't get trapped by buying the open and then have them, sell it off and then go back down to Friday's close to close that gap. So be aware that may be a good quick trading opportunity if they decide to fade the open. Getting a quick 1% flush to the downside would be a great way to start the week if you're an active trader. So be aware of that. If trading the open really isn't your thing, just let it go. Just be cautious about buying the open with that big gap below. And if you do that, please set your stops and respect them if they decide to take it the other way. So we're going to have to watch that very closely. So a lot to go over this morning, so let's dive in on the charts. I've backed it out this morning to include the daily charts because I think we're at an important juncture. As we discussed on Friday, they parked it right on the SPY 50 EMA at 370, and that's a great benchmark location for you swing traders and active traders as well. As long as SPY can hold 370, things remain broadly bullish, right? If they can hold that line in the sand and keep the big broader uptrend intact, 370 will be a good line in the sand. If for any reason price falls below on a daily closing basis, below 370 or below the 50 EMA, then we've got to look lower for other places of support, possibly down here in the 360 area and then the 350 area. And then notice the 200 is all the way down here at 340. Now, that's not a prediction. I'm just saying, if we lose a key support level, then we've got to look lower to possibly look for the next areas of potential support if they decide to sell it off. But as I said in the notes, I think the backdrop is and remains mostly bullish, but we've seen sentiment and positioning be crazy bullish, and that in itself is bearish. So there's been this tug of war between positioning and the backdrop. And one thing that has really been hurt in recent weeks is the reopening trade. All the commodities, the resources, the reflation trade, those have been whacked over the last 2 weeks. And I think that trade is going to be resurgent down the road. It's a question of timing. And the key thing there to watch is the dollar. If you see a rising dollar, that's going to be a risk-off indicator for the market, and especially the reflation trade. If you see a falling dollar with rising interest rates, that's going to be bullish for the reflation trade and the market in general. So I want to watch for that inflection point. I mean, names like Freeport-McMoRan, all the resource names, the materials names, the travel, hotel, all that kind of stuff should be resurgent if the reopening trade comes back into focus. So we missed the first pop and we avoided the drop. So now if we can be opportunistic and look at those names for a turnaround, we got a good chance of capturing that. So moving on to the SPY 2-hour, we lost this uptrend channel. We're down here at 370. Of course, we've got a 1% pop on the open. I'd be keying off of this range in here around 373 to 375 as a potential Fibonacci reversal zone. Here I've got the 30-minute chart. I mean, this looks a lot like a classic bear flag. And if we open around 374 and then they pull it back and break this flag, I mean, you can see the measured move is quite a bit lower. That's not a prediction. That's just the technical setup. If they recapture 374, you can see that was a support level here, a support level here. So if they recaptured 374, I think you can be long against it and look for a move higher. But then you've got to draw the line with a stop just below, because if it pops above and then drops back below, I think you're coming back here to 171 or 371, 370 to fill that opening gap below. Qs have held up better than SPY. You can see that the 50-day EMA is down here at 309, and we're well above that here at about 314. So we're above what I call a big level of concern. Now that said, we did drop below this rising channel that's been in place since early November. So what the bulls want to see is a pop back above and close within the channel, and a close above the 20-day EMA, which is at roughly 318. So if the bulls can accomplish that today, then the short-term crisis of this drop below will have been averted. Now here on the 2-hour chart, you see the same thing. Bulls got to pop it above 318 and hold it to get back in this 2-hour channel. If they lose 314, then you're looking at gap fills below down to 312, and then there's a sizable gap down below 310 down to 307.50. That would be a big level at 307.50, and that would be below the 50-day EMA on the daily chart. Here's the 30-minute chart. You can see that classic bear flag look. Now we're going to open 1% higher here, so I don't know where that puts us exactly, but it's probably going to be in here in the 316.50 area. And if you're a nimble trader, I would think you'd be able to use 317 as a upper pivot level. You can see there's a value band here between 317 and 313 down here where this gap is. If if QQQ could come up and reclaim 317, I think you can be long against that and then look for a rally later in the day. But unless it can clear that level, I'd be pretty skeptical about getting long in here, and I'd be ready for a gap backfill of that opening gap from the open and have them bring it back into this 315, 314 area. IWM, you can see on Friday we closed below this rising channel. We lost the 20-day here at 207.50. We've got a level of support here at 204 that I think is really important. I think for the bulls to stay in charge short term, they've got to hold 204. If they don't, then I'm sure we would come down here to the 50, down here at 196.50 to test that 50 EMA. 2-hour chart, nice well-defined downtrend we got going on here. If price were to kick back up to the top of this downtrend channel at around 208, you've got an objective short there. And remember, there will be this opening gap below, just like on all the other indexes, that you'll need to take into account. If price could pop 209.50 and hold it, I think you can try a long against that and look for 212 if there's going to be some big rally. But I'd be skeptical of that. I would be ready for a move to fill the gap below. Here on the 30-minute chart of IWM, again, we've got that classic bear flag look. In this case, a flat flag, a move down, then consolidation between, say, 205.50 and 207, pretty wide range. So, watch the open, watch your downtrend resistance line. Make sure you've got some good support under yourself before you take a long, and certainly have a line in the sand where you'll know if your long idea is wrong, and quickly get out of that and flip back to a short bias. But I think here on the 30-minute chart, you can see the large volume over price resistance here at 209.50. I think you got to clear that before you can take a confident long and set your stop just below and then look for 212.50. Let's run through FATMAAN real quick. Facebook, terrible week. They really pulled the rug out of this. They pulled $20, 277 down to 255 before they could even marginally bounce it. I've put on the fib levels, 38% here at 263. I think the level that's going to be key is 266. If they bounce it into 266 and it finds trouble there, I think that's your half back short entry. The down move, 50% bounce into 266 resistance. That's your objective short. So stick with the trend until proven wrong. And I think that's your objective level to try something. And with a 1% opening higher, I haven't checked it exactly, but if the market's opening up 1%, I would assume Facebook is going to get at least some type of opening bounce, and then you'll have that gap below. Also, tough week for Apple. I've put the fibs on here on the 60-minute chart. You've got a level at 133, and you've got a level at 138. To me, price has to recapture 138 to say, okay, legitimate breakout, and then we're moving higher. I think here, if you were to get a move into 138 and you see a stall there, I think that's an objective short. I'd be less confident with these other fibs just because there's not any big resistance level over here. It's pretty much open. So I'd be certainly be aware of these fib levels, but it may be an easier path for this to find 138 than like on Facebook. Tesla has dropped below this 800 level, which we said was important to hold for this trading range to stay in place. I haven't looked for what it's doing this morning, but if it stays below 800, this is vulnerable to much lower. I do have a short on it for this week. If it pops above 800, I'll take that off and wait and reload. But 800 is your pivot today. Above 800, you can look for higher. Below 800, I think still favors lower. Microsoft held up pretty well last week. Settled in here around 232. I think you can be long against 230. Anything above 230, I think is bullish. But if it loses 230, that will call into question this breakout, make it look fake, and I would be looking for lower. But as it stands right now, I think you can be bullish and or long against either 232 or 230. Amazon has earnings tomorrow. 3,200 is your clear pivot. Above 3,200, look for 3,250. If for some reason it's weak, you've got a big gap below. But I think Amazon has a higher probability of being higher today than lower. Maybe get a run into earnings. Check where it is at the open. I wouldn't be inclined to take a position right away unless it was really close to 3,200. I mean, if it's in here at 3,225, you're in no man's land, and I think that would leave you pretty vulnerable to a pullback. So be patient on Amazon. If you can get a long entry close to 3,200, I think that is the ticket. Google also reports tomorrow. This 1835 might be an interesting level for you if you're interested in trading it to get a run higher into earnings. I think if you can get long close to 1835, you'd be able to put your stop just below and be in good shape. I think that's your pivot point this morning. Netflix sitting on top of this gap at 535. Anything north of there, actually 532.50. Apologies. That was the gap from Friday or Thursday last week that it is, held. But it's been weeks since the earnings. But as long as it holds that or above 535, you can look for higher. But below, that's going to fill us down to 525 and potentially go even lower into this gap area from 515 to 502. Let's run through the spider sectors real quick since we covered those last week. Materials closed well below the 50-day EMA down here. It's got to recapture 72 to get back on the right side of the chart. So if you're short, I think you can stay short against 72. Communications, Facebook has been weak. Google has yet to report. That's 44% of the index. Has filled this gap, but still above the 50 EMA. Unless you got some big view on Google, I wouldn't be messing with this today unless you already had a position. But I would be keying off of 66.5 and then the 50 at 66. XLE right on the 50 with the 200 right below. So if you're an energy bull, you got to hold this 39 right here today and in the days going forward. And if you were to recapture this 41, I think that's a good buy point on the way back up if we do in fact get that move to recapture 41. At the same time, you'd be recapturing the 20 and the 8-day, and then price would be above all your moving averages, and that would be a bullish setup. But a drop below, then you're looking at the 200 down here at 38. Financials have been weak. You got price sitting on the 50-day. Of course, that's going to be interest rate sensitive. This sell-off here has been the fading of the reflation trade. Anything above 29, I think you can be bullish. But if it loses 29, you got a long ways down to the 200, $2.50, which is a big percentage. You do have a layer here at 28.25 where you could find some support. But if you lost the 50-day, I think you can be short against that. Same thing, XLI, well below the 50 now with price in a void. Path of least resistance is going to be down. If you got a kickback up to 86 or 86.50, below the 50, below the 8, and below the 20 EMAs, I think a short bias would be in order there. I mean, you're below all the moving averages, below volume over price resistance. I think that favors a move lower into the 83s and 81s and potentially all the way down to 80 where the 200 comes in. Technology lost its channel, got the 50 EMA here at 127. I would key off of that. As long as that holds, I think you got to be relatively bullish on this setup. But set yourself an alarm there. If it loses 127, there's a lot of room to fall below that. So Staples lost this big triangle down to 64, well below all the moving averages. You got the 50, the 20, and the 8-day above and below this rising triangle. The path of least resistance is definitely lower here. I would expect at least a tag down here at 63. And if you got a kickback today of, something into 65, that would be an even nicer short entry into Staples. And then you could be short against this uptrend line with a stop just above. Not really a trade to make in utilities, kind of grinding here within this little triangle. I wouldn't even mess with that. Here on healthcare, we have this rising wedge. We dropped below with a big impulsive bar on Wednesday of last week. Thursday, we had a back touch, and then Friday back down below. So we're below the 8 and the 20, but still above the 50. I think from a TA standpoint, it's still bearish. because PPO is rolled over, RSI is rolled over, you're below the wedge, you're below your 8 and 20. I think that favors a tag of the 50 EMA. If you got a little kickback today, I mean, you'd have a better short setup, but I don't know if I'm really motivated to short this one. I think there's better shorts out there. I think the industrials was a better setup for a short because it's already below the 50. As long as this holds the 50, I think you got to give the bulls the benefit of the doubt. And really, same thing on XLY. Don't forget that Amazon has 25% weighting in this one, and it reports tomorrow. Here on Friday, tagged the 50 and has held it. I think you got to be bullish as long as price is above the 50. And whether you want to take a stake ahead of Amazon tomorrow after the bell, that's up to you. I'm going to be steering clear of this one, not really interested in doing anything with it as it sits right here and as Amazon is set to report tomorrow. So let's do a quick recap as we head into the trading week. If you're interested in fast money trades, you can follow the Wall Street bets with GameStop, all the retail names, and of course silver and the silver miners. For the rest of us, be concerned and aware of that big 1% gap higher opening where there's always the potential of them selling off the open, filling that gap quickly, and then reversing it back higher. That would be something where would be a nice opening trade if you caught that down flush, if it comes. If it doesn't come, you can play that opening with a stop below at some juncture if it's going to be a gap and go higher. That is all going to be dependent on how comfortable you are in your active trading and, trading that 15-minute opening sequence. What I like to do is wait at least 10 to 15 minutes to set that range and then take it from there. If I take anything at all, I don't want to take that first bar. That can be a total head fake, and then you get whipsawed right out of it. So let there get an opening range established, and then you can use the high and low of that first 15 or 30-minute range, depending on how you want to trade it, as your levels to shoot against, either higher or lower for the balance of the day. So hope you get set for a good trading week. This has been Chris Buss with Trader's Profit Compass. If you're new to the video and you like what you've heard, please sign up and hit the alarm bell. You'll get everything notified when I publish new content. And over in the show notes are links to the blog site and how to register for all my content. You'll find a lot of interesting articles over at the blog, and if you register for the content, you'll get an invitation to our trading room, which has really been coming along in recent weeks with a lot of vibrancy, energy, and a lot of new traders coming in, providing a lot of new ideas and fellowship amongst aspiring traders. So if that interests you, we'd love to have you. And look forward to seeing you soon. So have a good day of trading. Chris Buss with Trader's Profit Compass. Talk to you soon.